Hey, this is Jack from Alpha Charts with a state of the market video. Today is March 25th, 2023. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. And I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. If you like these videos, please like and subscribe. It really does help my channel out, so I do appreciate that. And one final announcement. Trader Lion. So they're offering a special trial membership this weekend. I believe it's only for this weekend, but if you're interested, they're an amazing group of traders. It's only $19 for 4 weeks. And so you kind of see what they're all about without taking too much of a risk. So I have the link on Twitter. I'll also link it down below to make it easy for everybody watching through YouTube. But just a really just phenomenal group of traders. So if you're interested in taking advantage of this offer, like I said, it's only $19, so there's only very little risk to you guys. You don't like it, you just cancel. But they just, again, they're phenomenal. So check them out. Trader Lion Group. Let's get to the charts. S&P 500. So the question here is this a sideways chop, and are we going to head back up to the top of this range or even beyond? Or is this some sort of more of a topping pattern? I mean, the 200-day is held again, which is a huge positive, I think. Huge positive. And this VWAP from the bottom, right? So we retook that. But still in this mess. And we're still seeing a decrease in, like Friday was a nice day, right? Up a half a point. We saw a nice reversal, but it was on lower volume. The conviction isn't there, in my opinion, to really go one way or the other. You also have the 50-day now starting to flatten out again. So, you have a 200-day, which is flat, 50-day, which is flat, 23-day, which is flat. So the flat moving averages to me says indecision, right? We don't know which way the direction is really going. And so, this is not be a hero type of market. That's it. We don't know which way yet. Anybody that tells, yes, listen, there may be a divergence here or there. We can always find a divergence. And maybe it plays out for a little bit, but there's a lot of overhead supply now that needs to be worked through, that's been created over time, right? Lots of overhead supply. So just kind of be aware of that. Let's go to the weekly. Maybe we can see a little bit more structure in there. So the VWAPs from the top, VWAP from the bottom. You see the week was up 1.39%. There is this little toppy wick here. You see that selling wick. You know what I'm saying? Like there's all these selling wicks, indecision bars all over the place. I mean, again, not a ton of conviction for me in this chart at all, one way or the other. There's your topping pattern. We don't know if this is going to, get to the VWAP or something like that and then turn around or not, right? It's just this messy sideways action. The thing that, if this is a down and this is kind of like the three little kind of bumps in the road, there's something about this that just makes me feel like it's lower to come, but I don't know that. But this type of look with a big move down in the three humps, that gives me that the lower vibes. I don't know. But just looking at what the chart is doing, it's just indecision at best. Let's look at RSP. So the equal weighted, beautiful reversal bar also on Friday. So that we got that going for us. I need to update this 200-day moving average because it's way off. June 7th. There's June 7th right there. All right. And then we're going to start losing some of this information next week. But we already have a declining 200-day again. We were so excited, as I was, when over here, when things were going to start to flatten out and start moving higher. Well, I'm equally sad that this is starting to move lower, and this kind of looks bear flaggish. Now, again, it's held, right? It's held this 136 area, right? This area right here, right? Maybe this is an oops reversal, and we get some movement up to the 200-day again, 141-ish, right? 142, something like that. It's extended to the downside. There's no doubt about that. So, but if this is a bear flag on the equal weighted, that's pretty nasty, right? We'll see. Again, just right now we have an oops reversal. So short term, maybe a little bounce, maybe to this 142-ish area where you see moving averages are kind of starting to bunched up. But again, on the RSP, you have a declining now 50-day. You have a 200-day that's starting to decline. I mean, those are all more bearish signs. So if we don't retake those averages pretty quickly, those moving averages, that's for me very, very bearish. SPX, RSP versus SPX. And this week we did get a little bounce. So I was looking for a reversal in these. There was a little bounce, so a little breath recovery, I guess, but very little, right? So we need to see more of this, right? We'll see if it happens or not. But RSP outperforming SPX, that would be something that would be interesting and welcome for the bulls. Going to the Qs. Qs, surprisingly enough, holding up better than the other indexes. And we haven't said that, only since, maybe the beginning of February, right? So it came back up to the VWAP from the top and it got rejected again. We do have the flat 200-day, we have the crossover. So this one looks kind of bullish, right? Qs look kind of bullish, flat 200-day, and we'll see if it can continue this, between 311, 316, that general area. That's the war zone right there, right? That's fighting. Bears and bulls are fighting. Let's see what it did on the week. 1.81 on the week, again, a little bit on the lower volume side. And you see how it touched again, right? Touch, almost touch. And it hasn't been able to break through on a closing basis, in a year. We'll see if this time is different. If it does, that gets me much more bullish, right? And if it doesn't, then vice versa. Equal weighted, let's see how that one did. 1.14, still underperforming. And you could see that, this one had done better with the VWAP from the top, but did eventually get rejected each time. And so only 1.14 on the week. And looking at Qs equal weighted versus Qs cap weighted, and you can see the underperformance, right? So the question is this the I'm going to pull up a FinViz here real fast just to see. So this is S&P, but it's the same idea. It's actually worse than the Nasdaq. I can pull it up. You see how Microsoft, Apple, Google, Amazon, Tesla is actually Tesla's not an S&P. Is such a big weighting. Well, the question is, are people hiding out in these big names for one of two reasons, right? The first reason is they're very highly liquid names, and maybe they are, if you need to exit a name, you have to be in the most liquid names, because you can't exit a smaller name, very quickly, right? These names won't let you out the door very, very quickly. So you have to be in these large liquid names to get out the door. The other possibility is that they are just large and safer names in general. So if that's the case, then if that's the case, then basically, they're just hiding out in there, and then they can redeploy the cash whenever they want to. We'll see. I don't know the answer to the question here. I found what I was looking for, by the way. I was just kind of buying time. It's all true, but is this the Nasdaq? 100. And is it by cap weighted? Oh man, this one's not by cap. Oh, that's not what I wanted. I'm sorry. All right, let's just get off this kick. The point is that the largest companies of the Nasdaq, there it is. I think. Yeah, I can't find it. Forget it. Point being is Microsoft, Apple, Google, Amazon, they are taking they have just giant percentages of the Nasdaqs. Yeah, man, it's not like what I'm looking for. Gosh. All right, let's move on. Next up, IWM. All right, so on the IWM, again, we have this move down. I'm on the weekly. Let me go back to daily. You know, you have the move down. You maybe have the oops reversal, but as long as 163, 164 holds, that is the key, right? That's the key for everything. June 7th. Let's just move that one day over. Right there. And right now it is, but we are starting to see this 200-day start to flatten, this 50-day start to turn lower, right? Again, a bearish look as these moving averages start to catch up to it, and much higher volume right there. Capitulation doesn't feel like capitulation. Maybe it is, but doesn't feel like it. And IWO, let's look at that. Growth, same kind of look. You know, we were real excited when we were seeing this turn up, and then less excited when they came back down, right? And then mid caps, same look. Again, this was my favorite index. Now we're living below the 200-day. Again, maybe it's an oops reversal, right? And we get some kind of bounce up. But with a declining 50, you know, we'll say flat 200 at best, right? If not flat to declining, 23-day starting to catch up. You know, I'd look for maybe a bounce of 447, 448. But beyond that, it's going to be hard. It's going to be real hard. All right, moving on to individual ETFs that are important. And one of the most important is the XLF. Going to a weekly chart. And let's just get some of these moving averages out of the way. And you can see on the weekly chart the importance of this area, right? 2007, 2018, 2020, then 22 a couple times. And now we're back to the scene of the crime, right? Right back to the scene of the crime. The market tried to push it lower. It did by like a penny, I think, or 2 cents. So the question is this a bear flag that's starting to break down? Or is this going to be some sort of, again, oops reversal, and it holds here like it did so many other times? You know, we don't know, but we do know that $30 is the general area that, you know, we need to watch. So that's about 3% lower in general, about 3% from here. And that's that's the area, right? Let's see exactly. Maybe 4%. 3.5. That's the area though that has to hold on in XLF. This is probably the most important chart that we're going to look at today, I think, because if this doesn't hold, then we're in a world of hurt if price gets down here. And if it does hold, then maybe there is some kind of counter trend rally or something going on. So $30, that's the most important piece. Let's look at XSD. This is the equal weighted semiconductors. And I'm going to put the moving averages back on. And they're holding up really well. And you have kind of like all the moving averages all bunched up together. You know, you have the rising 200-day, 50 days rising. We did make a lower high comparative to here. So that's something to be aware of. You know, also the lower high on the SPX, you know, just, you know, if you think about it, to here, this is still a lower high. right? So really, we want to take this out. I'm sorry to just jump back into SPX, but that was a big deal that I've been watching is the lower highs. That's a big deal. So just be aware of that. This is still a lower high to this. I think we got to take this high out and ultimately this high to truly be safe in the SPX. I'm sorry to digress there. Let's go back to XSD. Lower high to here. And so we will see if this can get above it. If it does, very big, really positive, right? And if it falls here and really gets below this 188 to 190 area, right? That would be the bear case, right? This would be this would be, like a false breakout type of thing, right? If it can't, a lot of wicks showing up here, right? You don't see those wicks in the bull market. Very rarely are you seeing the wicks in indecision, but here you're seeing a lot of wicks on the weekly. So just, be aware of that. Next up is XTN. Transports, equal weighted. Again, we have a definitely defined area. It's still in this choppy mess zone, but not the bullish look on the moving averages. Do we get a bounce to that 200-day? Again, if you notice, a lot of the moving averages look like this. 200-day is flat to maybe starting to decline like this is. 23-day is about to cross through it. 50-day is flat or declining. So definitely a look that we could see an early week bounce. That wouldn't shock me, but it's going to have a big problem when it reaches the 200-day around $72 or so. Again, if that's your game, that's what you want to play, you may have that opportunity coming up, but the overall market structure looks choppy mess to down. So transport's not looking that great. Home builders. Here's your home builders. Again, they kind of lost. Like, this is what I'm afraid the semiconductors may do, right? Came above, could not make a higher high right there, right? Lower high, and then kind of fell back below the important area. We had the bunched up moving averages, everything kind of very similar to the semiconductors, but housing fell, right? False breakout. This has potential to move much lower. If it does bounce, I don't think there'll be a robust bounce. I could be wrong in this. So housing's not looking good. Financials right on the cusp, and transport's not looking good. Semiconductors holding up okay. Not the most bullish outcome of the areas. And I think people are worried, right? I mean, I think they're very worried. Watch that financial chart though. That's the one to watch. All right, let's go to internals and see what's going on there. Take all these off. And let's see the internals. The VIX. What did the VIX do this week? On the week, it was down 14% on the week. Okay, that's a positive, right? It's about 21.75. And yeah, I mean, it was looking pretty nasty last weekend, if you remember. And it came back in again. We're not low, but 21's pretty good. So that's nice to see. Okay, so credit spreads. Let's go to a weekly just to kind of see this maybe a little bit clearer. Okay, so here's credit spreads. And you see that a lot of times it's up, consolidation, up, right? It's kind of like any other chart, up, consolidation, up. So the question is this up, consolidation, up? Right now it looks that way, right? I mean, we had a further widening, not the same magnitude, but further widening of the credit spreads this week. This is safe government bonds, IEI. I believe it's 7 to 10 year duration, but don't quote me on that. And versus junk bonds. And so this is showing that the spread between the two is widening, and people are still piling into government bonds over riskier bonds. That's a problem. This has always been a problem. So I don't know if we go straight up, this was like COVID, or more likely we're going to go choppy up. But if it continues the up, these were not fun times in the market, right? Not fun times in the market anytime credit spreads expanded. So just, again, I think it'd be more like this than this, but we'll see. Again, it could reverse, but this doesn't have that reverse look to it, at least not yet. And maybe it does, who knows, but not looking good credit spreads. Next up, let's look at breath. And breath did rebound just a little bit at the end of the week, but you see for the week, again, just a little rebound. Okay. But still 21.5% of stocks are above the 50-day. That's not a very high amount. And there is some room to downside. Again, would I be shocked if we saw some sort of counter trend bounce up? Not at all. But so far, it seems like things lower is the more likely possibility. Again, don't know if that's going to happen or not. Maybe it's the capitulation move that we're all looking for, and we could finally, put this bear market to rest. I don't know, but breath is still, again, lower highs, lower lows, kind of bear flag-ish look if you want to put a bear flag on there. Not looking good. Let's go for call ratio. And again, right in the middle, right? Bears and bulls fighting it out. No one really has an edge in sentiment at this point because no one knows, right? There's a lot of confusion out there. And we're not even talking about macro at this point. A lot of confusion. Dollar, it lost 104. It actually lost 103, and now it's trying to make a comeback. We'll see if it does, but the rising dollar would definitely be a negative on the stocks. What's interesting is that as the stocks fell, the dollar fell too, and that's a correlation that we haven't seen in a while. So we'll see what happens. Yeah, I don't know if it needs to get to 120 or retest these highs or not, but dollar rising, I don't think is going to be good over if it rises quickly for the stock market. And we would expect bonds to 10-year yield to be falling because people are piling into government bonds for a safe haven, and this looks like it wants to go lower, which means yields go lower, which means more safe haven bond buying. We'll see if that happens or not. Gold's kind of interesting. Is it finally time for gold to break out? Right, we are basically right at that cusp. Gold breaking out, I think that helped. The dollar was falling, so it helped gold, I think, move higher. Also, it's a perceived safe haven, and so we'll see if it does. It's a big base, right? This is more than a decade, 12-year long base. I've been watching this one for a long time, and it just can't get going. Maybe now's the time. All right, and then let's look at Bitcoin last little bit. Thank you for staying with me. Bitcoin, US dollar, and what's going on here? You see the VWAP from, this is kind of interesting. VWAP from the COVID low is relevant in Bitcoin as well. Isn't that kind of crazy? Right? This is right where sellers were found. Now, it happens to also be in this general area, right? So there is a technical area too that this is related to, but still, it's pretty crazy. That's where the VWAP is as well. Anyway, so Bitcoin with a big move, now consolidating. Maybe this is a bull flag. That would be, I think, bullish for equities overall. If this is and it breaks higher, if it falls over, I think that would definitely be a negative on equities and risk in general, right? So in the end, I think it's time to just continue to be careful. I've been in this careful stance now for at least for a few weeks, and I say no reason to change that stance. There is a lot of uncertainty, and I really don't like a couple things. I don't like how there's a lack of real buyers yet. Right, there is XLF is teetering. I don't like that the large caps are outperforming equal weighted, or the cap weight indexes are outperforming equal weighted. Those are all things that are just maybe some warning signs of of worse things to come. Now, I'm not saying get uber bearish either, because we don't know that. But if I would say caution, play it small, definitely just be careful with any positions, because if this thing does decide to waterfall down, it will be very hard to get out, okay, at any price that you want to get out, right? You'll take whatever price they give you versus the price that you want. And so you don't want to see that happen. Something like this would be terrible, right? That moved in 4 days. That moved, 5% on the index. That could be 15 or 20% someplace else. So again, just be careful. Hope y'all are doing well. If you're interested in the Trader Lion, $19 4-week trial, I'll link again right below here. So go check out in the notes and you'll see it. Okay. Take care. Bye.